Welcome to Private Banking Strategies Podcast with Vance, Lowe, and Seth Hicks, your secret weapon to protect your assets and never have to start over financially again. Vance and Seth help high net worth individuals, families, business owners, and investors structure an asset-protected, tax-free fortress for their families. Learn how to keep what you earn and use the velocity of money to create your own private banking system. Join us on this journey as we explore the secret strategies of the rich and political elite and help you take total control of your financial security. Now, on to the show.
And welcome to Private Banking Strategies, folks, with Seth Hicks and Vance Lowe. Vance, how are you?
I'm doing great. Looking forward to this next session.
Yeah, this is a multi-part series we've talked about, starting with how to be successful with private banking strategies. And then the second part was understanding the problem, as we framed the problem and talked about how to look at these issues to be successful. And this third part of the multi-part series is putting the banking equation back in your life. And it's a exploration of how the banks always get the money back. And when we say that, what does that mean, Vince? How do the banks always get the money back?
Well, in this podcast, we're going to generalize a little bit. We go into more detail with other videos and things that we have in podcasts. The theme is how to be successful at this, being able to do this on our own. So putting the banking equation back in our life simply means that banks and the operation of banks, they always get the money back. If the banks can always get the money back, we can too.
Right.
It's only a strategy. And folks, I know people really want to think of this as being complicated, sophisticated, and difficult, but it's not. It's really as simple as stating this, finding out how the banks always get the money back. They always have a string attached to all the money and it always comes back. But we have to set up and run the same system. Banks would rather us use them. And we're not saying at all, and we never say that we still don't need regular banking. We do. For bill pay and a whole bunch of other stuff, we have to live in the world and the system. But where we store our money and how we use the banking concept, we can make the profits instead of the other banks. And that's why we're exploring this. So when the banks receive the money, Seth, what do they do with it? Do they burn it? Do they spend it? Do they hide it in their vaults? They get a lot.
They don't burn it and they don't spend it and they don't bury it. They always get the money back because they've got a cyclical flow and a strategy to put that money to work. How do they put that money to work? They make loans with interest. And they actually make loans with money that you and I deposited in their banks that they don't pay us anything for. So what a business model that they have, and we can actually implement it ourselves.
It is, and banks are the absolute best at understanding and using money to its full potential. Folks, we've always heard, we hear government all the time talk about interest rates and our economy and whether it's tight or whether it's loosened up. And it's all reflected from the interest rate that the banks are required to charge, whether that frees money up for us to borrow or not. But it's still a borrowing system. I've never have found a day yet, and I hope I've never missed it, where banks give away free money. Have you, Seth?
No.
Hey, come in and get $25,000 on us. No, that doesn't happen. Also sad to say that the branch presidents of banks, they don't get to go in and take money out of their bank. They can't go say, hey, I need an extra $5,000 this month, reach in the till and take that. If they do, they're going to be prosecuted just like a bank robber.
Right.
Okay.
Right.
Everybody's there for a purpose. Nobody's there that knows how the banks make money. That's been a shocking revelation over this last 20 years that,
Right.
They do really good, but everybody's trained into their individual positions. So banks always put the money to work. That's their job in the situation in America now, in our economy, that they put money to work. Sometimes they make it harder. Sometimes they make it a little easier based on policy. So before branch banking, let's go back in history. Let's talk about that a little bit. I mean, it's hard to imagine today, Seth, that, there's not a branch on every corner. Back in the day, there was no banks. People had to travel for days in order to get to one bank to make a deposit. And that was if the bank hadn't been robbed. Because we talked about Willie Sutton, bank robbers and everything else, they would always rob banks, and they were pretty successful at it for a long period of time. But the hideous part about banks is banks would overspend. I remember reading in history books of bankers being tarred and feathered in towns when they lent out more money than they had available. Because if a loan went south, a loan went bad, then the depositors couldn't get back their money. And that happened. Banks failed over and over again. All throughout history, banks have failed miserably to deliver their promises. And yet, even today, everybody thinks the safest place to put your money is in a bank. Well, it's not. So before branch banking, how did we handle the banking equation?
For hundreds of years before branch banking was indoctrinated into culture, banking was done through life insurance contracts for hundreds of years. And they're specifically designed life insurance contracts, and effectively that type of strategy and structure was intentionally eradicated by centralized banks after the creation of the Federal Reserve and the IRS in 1913, and basically the hijacking of the American economy through those two institutions. Centralized banking became a huge cog in that wheel. And so, just like you said, I mean, from the 60s and the 70s, everyone has been brainwashed to think that's where you store your money, as in the local bank at Main and First. Couldn't be further from the truth.
It couldn't. And they were very hideous about it. I remember in kindergarten. Now, for me, that's centuries old. But in kindergarten, the bankers would come in and set up a savings account for every single student. And they would provide the pennies for the first amount being deposited into the bank. We didn't even have to come up with anything. And they taught us what yield was. These accounts will yield X amount of interest for you. There was no such thing as average rate of return back then. It was yield. Yield is absolutely critical, folks, because yield means money put in the account that cannot ever be reversed by the economic situation. Okay? So that's what they touted. They brainwashed everybody into the banks were the most safest place on the planet. But up to that point, they were the worst. You put your money in bank, you had almost a 50% chance of losing it. Back when I was in kindergarten, back in the 50s, tells you how old I am, banks were fighting tooth and toenail trying to get the money away from the life insurance companies. At that point, almost 80% of the wealth of America was still in these life insurance contracts. Even today, there's probably more wealth in these contracts than at banks because it's the safe haven. Everything here we talk about guarantees, etched in granite, locked in, no economy risk, no market risk whatsoever. You can bank on this. This is your yield. This is a safe haven for you. And Americans lived by that law early on, and they became wealthy. They didn't have to have exotic investments. If they invested in land or gold or silver or things like that in other schemes, they could lose a lot of money. This was the safe haven.
Did that story feel like it was about you? Do you feel like you are generating a lot of revenue but are not moving forward as fast as you would like? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
So families from the beginning were taught self-reliance, how to survive in the wilderness, how to reproduce things in order to keep them alive, how to be safe, and run their own private economies. In other words, most people, educated people back before 1900, back in the 1800s, could literally go out in the wilderness and be the instigators of starting up a new town. They had that knowledge and what it took. And this is why most families had big families, multiple, half a dozen kids or more, is because every one was an economic unit. So being able to bring this banking equation back in our lives is what we're talking about. Having us have control, having our bank put the money to work is a whole world of difference. It's not complicated to set it up and run it, and it's definitely private, but you can service your family, your extended family, and never create a taxable event running this system. And so the key point is, though, in order to get the money back, in order to put principal to work, a bank has to be involved. Wouldn't you rather you own the bank than somebody else own the bank? Nelson Nash's book, Seth, there's a car financing story where one person used CDs and another person used this strategy. Could you explain the differences and who ended up with a better amount?
Sure. Yeah. It's a podcast called The Twin Sisters, and one twin sister decided to engage Uncle Nelson to help her use the private banking strategy, infinite banking concept strategy. And the other sister decided she wanted to use CDs to store her money. They both put away $5,000 for 7 years and then stopped contributing to the CD. The CD sister stopped contributing after she had banked $35,000, and the other sister stopped contributing to her life insurance contract premiums once she had capitalized it for 7 years with $5,000. So they used it primarily to finance the purchase of automobiles, and then they would repurchase automobiles and allow that money to grow and compound. And so the CD sister had $250,000 in available cash in her CDs, and she needed $50,000 a year to draw down. She was out of money after 5 years, 50,000 for 5 years. She didn't have any more money. The sister who used the private banking strategy, she had, I believe it was over $900,000, almost $1 million in cash value, that she also drew down $50,000 a year for the rest of her life. It didn't run out. And she also had a death benefit that she left to her heirs and beneficiaries that was over $1 million. And that was all just originally implemented to purchase automobiles through their own banking strategy.
The difference at the time of, I guess, 65 was about $700,000. But they both did exactly the same thing on the same days. They bought the same cars. They bought everything, paid themselves back all during that time. So, but there's $700,000 difference in this illustration. So, folks, if you don't have Nelson's book, that book is full of these type of examples that are true and real life. The difference was that the CD sister did not own the bank. And so the profits were received by the banks, and the extra interest and everything else was received by the bank, where the insurance sister, she owned a portion of the bank. She got profits every year. She got the guaranteed profits every single year that compounded up. And that's what created the difference. That's why life insurance was around before the stock market. Life insurance produces a steady amount of income. It produces a steady amount of growth, unparalleled through the history of the United States. It stays pace with the stock market. I get, brokers and everything else that try to argue with that, but they really can't once we pull out the actual effect in the account. They can come up with average rate of returns and come up with any number they want, but that has no meaning to what is actually put into the account. So the banking equation and what we're trying to talk about here, and Seth's example was, if you own the bank, you're going to make the profits. You're going to make the interest. All of that is inside your own economy, and you trigger no taxable events. Where the CD sister, she gets a 1099 every single year. She had to pay tax on the growth. However, if we're going to be fair, Seth, we got to tell them that the CD sister started out a whole lot better in the first couple of years. Her account balances were a lot better in the first 5 to 7 years. But after, I think, year 7, when they stopped investing, the IBC sister caught up and never went behind
Right.
from that point.
Yeah, there's really no comparison. We've got the illustrations that break down those numbers on the podcast called The Twin Sisters on our website. And you should take a look at it, folks, and really see the staggering difference between those two methodologies.
Okay, I think with this information, folks, it will give you a better heads up on how to be successful with this concept. Now, we may add, and I think we will, we can add how to set it up and run it, how you run it successfully to get the money back. Right now, that's set up for those people who have, kind of committed that they want this in their life. One of the things that Seth, you can explain this to them, but as you look at these podcasts and you read the book that Seth mentioned, you can set up an exploratory, and that exploratory is just going to give you an outline, and we're going to set you up to take this strategy for a test drive. So I think that's important for you to actually see if this will work for you or not before people decide, hey, yeah, I'll commit to get in. If they can see the results up front on their own numbers.
What Vance is talking about is connecting with us through our website, privatebankingstrategies.com. That's privatebankingstrategies.com. And on our website, you'll be given the opportunity to download our free book called What the Banks Don't Want You to Know, Secrets the Banks Don't Want You to Know. And you can put in your name and your email address, and we will continue to provide you with valuable email content on these type of topics and more that help you to understand why you need private banking strategies in your life. If our book, which is available in written form by PDF or also an audio version, if that resonates with you, and this podcast, which there's approaching 100 podcasts on our website archived, available under the resources tab. If those things resonate with you, then the next step is for you to schedule a call, an exploratory call with Vance. And you can access that through our emails that we send to you. His calendar link is available through the emails. That's how you schedule the call. And you can see how this will apply in your own economy and your own finances, how you take it on a test drive, as Vance said. And ultimately, we lay out an 8-year roadmap that shows you exactly what to do over 8 years, step by step, to take the financial banking equation back in your life and achieve financial freedom. So grateful, folks, that you're with us on this journey, and glad to bring this content to you. Vance, any closing remarks?
No, I hope we're being clear on our message. We love to be in America, where we tout ourselves as true Americans, but we're also independent. We believe in the Constitution. We believe that what we have to say is truth. It's the light at the end of the tunnel. And folks, all you have to do is test it out. All you have to do is take a look, and you might find the answers that you've been missing.
That's right. Well, thank you, folks. Thank you for joining us. And we'll see you next time on the Private Banking Strategies podcast.
Okay, bye, everybody. Thanks.
Did that story feel like it was about you? Do you feel you should be making more progress toward your financial goals? Do you feel stuck? Let us help you get unstuck. Are you ready to take action and get your own private bank? Please visit us at www.privatebankingstrategies.com.
Thank you for listening to the Private Banking Strategies podcast. Click the subscribe button below to be notified when new episodes become available.